Small Capitalization Balance Fund by Dwayne Gray, March 4, 2025. Portfolio Analyst. Portfolio management involves analyzing personal and financial information about your client to determine the asset mix that best suits them. Portfolio: 100 million in stocks, 30 million in T-bills, 60 million in corporate, provincial, municipal, approximately 66 million. Cash: 30 million. $230 portfolio total value. Step 1: know your client, understand investment objectives and constraints. Step 2: design an investment policy statement. Step 3: design an asset allocation strategy. Step 4: select securities. Step 5: manage the economy, markets, and clients. Step 6: measure performance. Step 7: rebalance portfolio. 9% earnings nominal rate of return. The estimate investors mandate. Low risk tolerance. Inflation: 2.8%, 9% return, 6.2% real rate of return. T-bill return is 5.17%. Present value of a T-bill is $95.08. Cash and cash equivalents: lowest risk, highest quality. Corporate issues less than a year. Highest risk to lowest quality. Balanced fund: low risk, high capitalization, predictable earnings, high yield, high dividend payment, low price to earning ratio, low price volatility. Know your client. Step 1: know your client, understand investment objective and constraint. Investment objective: balanced portfolio, some growth. Akin Realize Growth Inc., Canadian Tire Corp. Limited, Capstone Copper, Classica Inc., First Service Copper Ordinary, IMG Financial Inc., North Power Inc., Onyx Corp. Shares Subsidy Voting, Video Hub Corp., Quebecer Inc. Income: corporate bonds and preferred shares. Ontario Hydro, Toyota Motor Corp., Royal Bank of Canada, National Bank of Canada, HSBC, Honda Corporation, General Motors Corporation, Bank of Montreal 1, Bank of Montreal 2. Safety of capital: federal, provincial, and municipal. British Columbia, Manitoba Province, Quebec Province, Ontario 1, Ontario 2, Ontario 3, Saskatchewan Province. Liquidity: 30 million cash to be used up forever, whatever, and all stock can be sold. A loss of capital appreciation, quickly freeing up 100 million in estimated value. Salary: 85,000, and a fund saving of for TFSA $653, and a registered pension for RRSP $2,109 for the 6.5% real rate of return. Time constraint: they want to have about 35,000 to travel to Italy or Switzerland. Liquidity requirements: the portfolio has sufficient cash value, cash available 30 million. Tax requirement: dividend tax credit and dividends, dividend tax credit for dividends and capital gains tax. Legal and regulatory requirements: confidential. Unique circumstances: no cannabis harmful to children's brain. Investment policy statement: operating rules and guidelines. Fund can only be redeemed callable every 6 months. Monthly interest and is compounding. Asset allocation: equity as security 12 million equals 120 million for 10. Income security 4 million, 64 million for 16 securities. Safety T-bill 30 million. Cash 30 million. Total value of portfolio approximately 245 million. Portfolio description: balance fund, used to gain safety of capital, and portfolio swings will not be severe but moderate. Safety of capital, all This fund will allow a great deal of income producing between 7 8% and 12% per year. Good for pension funds and individuals who need a decent return higher than the risk-free rate T-bill, and a tad bit riskier. The moderate sector allotment to growth, but not extremely focused on that, as the swings are minuscule. Dynamic asset allocation with real return will be around 2% inflation, 10% to 5%. Portfolio rate of return fund is scheduled to return 12 to 7% minus inflation equals 9 to 5% real needed rate of return. Your requirement amount can be withdrawn every 6 months, including partial and full withdrawal of fund, and income generating is compounding. This portfolio is a person who can handle risk, low risk tolerant, risk averse. The list is acceptable and prohibitable in unique circumstances: cannabis, Bitcoin, ETF. Performance appraisal fund will be rebalanced every semi-annual or annually. Scheduled portfolio review quarterly. Investment objective to grow fund from 220 million to 500 million in 15 years at a growth rate of 7% yearly.